Hi, my name is Richard Hutton and welcome to the Exponential Fund, the place where you learn to invest and absolutely crush average market returns. Well, let's see the performance for this week. The account is fairly flat, down 0.46%. However, my personal account, which is much more concentrated, mostly in Tesla, is way fucking up. So that's nice. Now, today's topic is the idea that good investing is boring. So, when I tell friends this is what I do full time, investing, they ask me how long does it take every day to do what I do, and I say 3-4 hours. But the thing is, I don't have to spend that much. What I do during that time is basically watch YouTube videos, simply because I like to stay up to date with what's happening in innovation. So that's how I get investment ideas. But if I were to boil it down to the very essence, if I was allowed access to a computer only 1 hour per year, I would still absolutely demolish average returns, because that's how long it takes to execute my flagship strategy. I would simply look at what are the largest companies that are growing fast, do some rebalancing, and boom. All right. Let's look at this week's tweets. So, start off the week with trimming Shopify at a profit of 22% in just 11 days. Not bad. Next up, we have Alibaba. Again, sold part of my position at 26% profit in just 12 days. Not bad. Next, sold part of my Tesla position at a 10% gain in a week. Next, there's this tweet. I said, a month ago, on the day of the Russian invasion, Tesla stock collapsed massively, so I sold all my shares and bought calls. If you don't know, calls, meaning call options. Instead of buying the stock outright, call options, it's a derivative investment product, essentially which it's leveraged. So if you put the same amount of money in calls instead of the stock, it can go up in value much, much faster. And that is what happened. Now, obviously, I'm not glad that the war happened. I understand how this can sound like, oh, I'm profiting from the war. The war broke out, and a bunch of investors fucking panicked and sold their Tesla shares. Even though Tesla shouldn't be affected by this. Actually, Tesla will benefit from this because there's disruption in supply chains, oil prices go up, so electric cars are even more attractive. But for some reason, these fucking investors sold. And what do? Well, this is my fucking job, to invest. So I took the opportunity to invest more on that day. And it went up a lot. So, next. I said, sale day again. Bought more JD at 58.96. I said, I don't try to guess what stocks will do. If they go down, I buy more. If they spike, I sell some. It's pretty easy. All right. and closing the week with a fairly quiet day in the markets, bought a bit more Netflix at 372.19, right? So wasn't my strategy investing long term in big companies that grow fast? What are all these trades every day? These are just rebalancings. So if you're new here, a quick summary of my strategy. Think about the S&P 500. You heard so many people give this advice, just buy the S&P, buy the index, and you'll make 10% a year. Okay, but did you know that the majority of the companies in the S&P 500 have either declining sales, stagnating sales, or very slow growing sales? The criteria for a company to be included in the index is essentially to be big and profitable, even if it's declining. So can we really not do better than this? I said, well, if I want to beat the market, what if I only bought companies that are big and growing fast? What a concept. So to make it simple, my strategy, the exponential fund as I call it, is essentially to buy an equal amount of the 20 largest companies that have been growing their sales by at least 10% every year for the last 5 years, and then rebalance regularly, right? So that means initially I put 5% of my money in each company, but after some time, some companies went up, other companies went down. So some companies became more than 5%, other became less. And what rebalancing is essentially, the companies that went up, I sell some to get them down to 5%, and with that money, I buy more of the stocks that went down. And what does this do? I can systematically buy more of a stock when it's going down, buy low, and then sell some when it's going up. So buy low, sell high, without having to predict what the stock will do. Fantastic. And this is what I do every day with these trades. All right. So going back to the idea that good trading is boring. It really is. To be a good investor means to have the skill of discernment, to be able to differentiate between what is relevant and what is irrelevant. If I really wanted to simplify my trading to like its raw, simplest form, I could just put all my money in my best idea, like Tesla. I mean, I already have my majority of money, and I would keep my money there until Tesla stops growing fast. How do I define that? Well, let's say in the last 5 years, sales should at least double, right? So every year, at the beginning of the year, I could check, are sales at least double than what they were 5 years ago? Yeah, cool. I'll hold another year. That's it. 1 minute of analysis per year with a single company. The point is, once you have cleared in your mind what are these fundamental principles that you will adhere to invest properly, the execution of it is very straightforward. For me to invest is so easy. It's like a game. It's no effort. It's just pure joy. Right. Mainly what I do, other than just watch YouTube videos, is looking at ways of how to spread this message. So I see how great is the feeling of financial freedom, that I can pay for my bills without having to work because my money works for me. It's like I'm in heaven. I can wake up whatever I want. Nobody tells me what to do. I can just, go to a movie in the middle of the day. It's great. So, if you were to look at the news, every day there's some other crazy headline to make you scared and whatever. That's all noise. Good trading is boring. Till next time.